2, 1. All right. We are on. We've got Instagram that we're waiting to tune in, trying to get our Instagram connection up. Okay, good. Hello, Facebook friends. We are live on Facebook and Instagram. My name is Amanda Creech with Berkshire Hathaway Home Services, Florida Network Realty. I like to say closing deals and heels. And today we're going to talk a little bit about financing. There's a lot of steps in the home buying process, but one of the questions I get most about is how do I get a loan? How do I qualify for a loan? What are the steps? And it really goes hand in hand with buying a home is the mortgage. So I have my friend and fellow College of Charleston alumni, go Cougars, Ryan Salem here. Ryan is a mortgage specialist here in Jacksonville, Florida with Trustline Mortgage. And we're going to talk today about those beginning steps of the loan approval process. This is going to be a 3-part series. So over the next month, you're going to get to see us a few more times. And we're going to talk later on about loans, appraisals, and closing costs, which are also very important. But today is really just kind of the beginning steps of it. So thank you, Ryan, for joining me today.
Yeah, thank you for having me.
On this cold, freezing day. Okay, so one of the most common questions I get from my home buyers is, how do I qualify for a loan? So can you explain those beginning steps and how one would go about qualifying for a loan?
Sure. The pre-qualification process is really simple and fairly quick too. I would start by just getting a little bit of personal information from you in terms of your income and employment history. We do have to pull a credit report, and that will allow me just to explore the different loan options and really find the loan that suits your financial needs the best. Once we've gone over that, then I can send you a pre-approval letter so that you can make an offer on a home.
Okay, so let's just say I call you, Friday afternoon. How long does it normally take that pre-approval process? How long will our conversation take? And then how long will it take to actually find out if I'm pre-approved?
Sure. The conversation doesn't take long, maybe 5, maybe 10 minutes, just so I can get some information from you.
Okay.
And then after that, it usually takes me just a couple hours, to get back some information to you.
Okay, so someone could do it like on their lunch break, right?
Oh, absolutely.
Okay.
Let's say, for example, if you call me on your lunch break, I should have some information to you before you leave work that day.
Awesome. So a couple questions to that is, let's just say I've been unemployed for a few months, haven't found a new job yet, but I had a really great job before. Can I qualify for a loan?
Not at that moment. You do have to have a source of income in order to qualify for that loan. But it's typically not an issue if you have been out of employment for, a month or 2 months, just kind of depending on that gap of employment, as long as you're moving into the same line of work.
Okay, so if I quit a job and then like right away I start a new job and similar salary, it's fine.
That's not a problem.
Okay.
We've even had people switch jobs mid-process. As long as their income is still in line and they still qualify, it's not a problem.
Okay. And what about if I'm on like a 100% commission job? I'm in the food and beverage industry or some type of sales. How does that work?
That's a little bit different than just a regular W-2 employee. With someone who earns their income purely off of commissions, the key thing is having a complete 2 years worth of history receiving that income.
2 years. Okay.
Right. Essentially what we have to do is just take the average of those 2 years, and that's what we can use for your monthly income.
Okay, great. That's really good information to have. So you mentioned just briefly before about the pre-approval letter, and I want to talk a little bit more about that pre-approval letter and how important it is, especially in the competitive market we're in today for buyers. So let's just say we go out home shopping and we find just the home of your dreams and you're ready to put an offer in, and we don't have that pre-qualification letter. If we submit an offer, it is probably not even going to get looked at because the seller wants to know that you have spoken with a lender and that you've been qualified and that you can actually afford this house that you're putting an offer in on. I've seen it before. People go out, they house shop, they love it, they want the house, they put in an offer, they don't have their pre-qual letter, and then someone else swipes in, sweeps in, and gets the house, and they lose the house. So don't let that happen to you. If you're thinking even in the next few months that you want to buy a home, go ahead and get pre-qualified now so you have that letter. How long does a pre-qual letter usually last for?
Typically about 90 days, which is essentially how long your credit report lasts.
Okay, so yeah, so if you're thinking in the next month or two that you're going to go home shopping, then definitely go get that pre-approval done now. And it also helps us to know what you can afford and what the price point is that we can look in.
Yeah.
Awesome. So let's say you have your pre-approval letter, we found a house, we got the offer in, they accepted it, so now we're officially under contract. It's very exciting, but there's still a lot of work to be done. Your first 5 days of going under contract on a house, you have to apply for your mortgage and choose your lender. So you have 5 days to do this once your offer is accepted. So this is a pretty quick turnaround time. So you're going to go out shopping. I like shopping. Shopping's fun. But it's a different type of shopping. You're going to go shopping for your lender. So Ryan, tell me a little bit about what someone should look for when they're shopping around in those first 5 days for their lender.
Sure. One of the most important things to look for is customer service. Purchasing a new home is oftentimes one of the biggest financial decisions a person can make. So it's important to be working with someone who you know you can trust, and someone who can explain the process to you every step of the way and explain all of your options.
Definitely.
I also recommend working with a lender that's local. One of the nice advantages to working with a lender like Trustline Mortgages, we've been in the community for 30 years, and we use local appraisers.
Oh, yeah.
Oftentimes, big banks will have such a large list of appraisers that you may be getting someone from out of town coming to appraise your home in Atlantic Beach, for example, and they're just not very familiar with that market.
Okay, and if your house isn't appraised, you can't buy the house. And we will talk more about appraisals next week. Appraisals are very, very important. What are also some red flags that someone should look for when they're talking to different lenders?
Sure. One of the biggest red flags, in my opinion, is lenders that collect fees up front. Oftentimes, they may collect an application fee or a processing fee just to either start the loan or even just to give some information to you. Typically, what they'll do is they'll tell you what you want to hear just to kind of get that fee from you and get you in the door. And they may change the terms or conditions of the loan once you're already kind of invested with it.
Yeah, I'd be happy with that.
No, definitely not. Another red flag to look for is no closing costs. Oftentimes lenders may advertise this, but they'll typically hide costs or fees into the interest rate or other places. So there's always costs, and you're paying for them one way or another.
Okay. So interest rate. How is that decided? Because I've talked to different buyers and they talk to lenders, and someone's given them a 4, someone's given a 3.8, someone's given a 3.5. So is that something that someone should look for, like the difference, and how's that determined? Oh,
absolutely. And the interest rate is obviously very important as well. The interest rate's mostly comprised of your credit score and your down payment. Okay. So that's kind of where the interest rate stems from. Typically, I shouldn't say typically, sometimes, lenders may charge you points for a lower interest rate, which is okay, but essentially what that is you just paying additional money to buy the interest rate down lower.
Okay, so like if I qualified at a 3.8% interest rate, but I really wanted 3% to get my payments down to a certain amount, I could spend money up front to buy that down.
That's exactly right.
Okay, so a lot of times that depends on really how long you're going to be in the house and if that's really worth the money up front and the difference it's going to make in your payments.
Right. Sometimes it can be beneficial, really just kind of depending on, how much money you have and that you're willing to spend and how long you're going to be in the house. Sometimes it's not so much beneficial, and it's better to pay a slightly higher interest rate over the life of the loan.
Okay. Really great information to know. So once we decide what lender we're going to use, we've gone shopping and we've chosen our lender. Now we actually have to apply for the loan, which is a much more detailed process than that pre-approval that you did a few weeks ago.
Right.
So tell me, what do I need to have for that loan approval, and what are you looking for?
Sure. So once you've received the offer and you have the accepted contract, the first thing that we need is that signed contract so that we can kind of prepare our initial disclosures that will need to be signed. I do have to gather some information and some documents from you. In terms of your tax returns for the past 2 years, W-2s for the past 2 years, and typically about 30 days worth of pay stubs and 2 months worth of bank statements.
Okay, so quite a bit of information.
It can be, absolutely.
And I often find at this point, you're in this 5-day period, a lot's going on, and buyers can get a little overwhelmed about getting all this information together so quickly. So my recommendation is, if you're going to buy a house anytime in the next year, especially with tax season coming up, you're doing all your taxes now, is keep all that stuff together. Start to gather it now and put it in a really pretty, preferably pink folder, because I love pink, and have it somewhere handy so when you get into that 5-day window, it's all done for you and you're not scrambling around, and you can just hand it over to your lender and let them do the rest of the work. Okay. Well, that's all for today. Thank you, Ryan, so much for being here today.
Thank you.
I really appreciate it, and I hope you guys all found this informative. If you have any more questions about this, please feel free to shoot me a message, and I will help. Ryan can help. We can definitely get your questions answered. We'll be back probably next week, maybe the following week, but soon. I'll announce it. This is one of a 3-part series on financing your home, and we're going to be talking about first-time home buyer loans, renovation loans, FHA loans, all that fun stuff, what an appraisal is, and how it's important for the state of your home. Awesome. Thanks, guys, so much. Have a great day. Stay warm, and go Jags!
Go Jags!